The Sensex is India's most closely watched stock market index. It reflects the health and performance of the Indian economy. When the Sensex goes up, it generally means that investors are optimistic about India's economic future. Conversely, a decline in the Sensex suggests growing concerns about the economy. The Sensex is used by investors, analysts, and policymakers to gauge market sentiment and make informed decisions. The Sensex is a crucial indicator of the Indian stock market's overall direction. It provides insights into investor confidence and market trends. A rising Sensex often indicates economic growth and profitability, attracting more investors. On the other hand, a falling Sensex can signal economic uncertainty or weakness, prompting investors to sell their holdings. The performance of the Sensex has a significant impact on the Indian economy. A strong Sensex can boost investor confidence, leading to increased investment and economic growth. It can also positively impact consumer sentiment, encouraging spending and economic activity. However, a weak Sensex can have the opposite effect. It can dampen investor sentiment, leading to decreased investment and slower economic growth. Therefore, the Sensex plays a vital role in shaping the Indian economy's direction. The Sensex comprises 30 of the largest and most actively traded companies listed on the Bombay Stock Exchange, or BSE. These companies represent various sectors of the Indian economy, such as finance, information technology, energy, and consumer goods. The selection criteria for the Sensex are stringent and designed to ensure that the index accurately reflects the overall market sentiment. The 30 companies included in the Sensex are carefully chosen to represent a diverse range of industries and sectors. This ensures that the index provides a comprehensive view of the Indian stock market's performance. The companies are selected based on their market capitalization, liquidity, trading volume, and financial performance. To maintain the relevance and accuracy of the Sensex, the index undergoes periodic rebalancing. Rebalancing involves adding or removing companies from the index based on their performance and market conditions. This ensures that the Sensex continues to represent the most significant and actively traded companies in the Indian stock market. Several factors can lead to the rebalancing of the Sensex. One crucial factor is changes in market capitalization. As companies grow or shrink in size, their weighting in the index needs to be adjusted. Other factors include mergers and acquisitions, delistings, and the emergence of new industry leaders. The rebalancing process ensures that the Sensex remains a true reflection of the Indian stock market's dynamics. In a historic move, online food delivery giant Zomato recently replaced JSW Steel in the Sensex 30. This marks the first time an Indian startup has joined the prestigious index, signaling a coming of age for the country's burgeoning startup ecosystem. Zomato's inclusion is a testament to its remarkable growth trajectory, strong financial performance, and the increasing influence of technology-driven companies in the Indian economy. Zomato's entry into the Sensex is a significant milestone for the Indian startup ecosystem. It highlights the growing maturity and recognition of Indian startups in the global market. Zomato's inclusion is expected to attract more investors to the Indian startup space, providing them with greater access to capital and growth opportunities. The move also underscores the shifting landscape of the Indian economy. Traditional industries are being disrupted by technology-driven businesses like Zomato, which are transforming how consumers access goods and services. Zomato's inclusion in the Sensex reflects this broader trend and the growing importance of the digital economy in India. Zomato's addition to the Sensex is a positive development for the company and the Indian stock market. It is expected to increase Zomato's visibility and attract more investors, further boosting its growth prospects. Moreover, it enhances the representation of new-age companies in the Sensex, making it a more accurate barometer of the evolving Indian economy. On December 23, 2024, the Sensex closed at 78,540.17. Marking a gain of 498.58 points or 0.64%. Similarly, the Nifty 50, another key Indian stock market index, ended the day at 23,753.45, up 165.95 points or 0.7%. These positive figures suggest a bullish sentiment among investors, driven by factors such as strong corporate earnings, favorable global cues, and continued economic recovery. In other market news, the Indian rupee weakened against the US dollar, reaching a record low of 85.13. This depreciation can be attributed to a widening trade deficit and concerns about the U.S. Federal Reserve's monetary policy tightening. On the commodities front, gold prices rose by rupees 570 to 78,700 per 10 grams, while silver surged by rupees 1,850 to over 90,000 per kilogram. The 10-year bond yield, a key indicator of interest rates, closed at 6.7739%. These market movements suggest a dynamic and evolving economic landscape, with both opportunities and challenges for investors to navigate. It's essential for investors to closely monitor these market indicators and stay informed about the factors influencing their movements. Understanding market trends and economic data can help investors make well-informed decisions and manage their portfolios effectively.